let's get to it. January 11th. I'm hoping everybody had a good week last week to start the new year. Um, this one's kind of going to be a little longer, and I'm going to save gold and the metals for last, so that we can I expound on it a little bit. But got a little bit of news earlier about bonds, and in the USA, President Trump has ordered the government to buy 200 billion in mortgage securities. And while that should, uh, we should see some effects and essentially see the rates drop. Here's what that kind of means. So your 10-year note is really where your mortgage bonds are viewed. Um, so what happens in the United States is all of your mortgage loans get packaged up and sold in a security on the open market. So when you buy something, it goes up, but the rates are inversely correlated to the price of the security. So technically, it should drive the rates down. So I expect initially bonds to, especially the 10-year, to see a drop. But to me, none of that really matters because people can't afford the down payments for these overinflated priced homes. That's another fundamental conversation for another day. But for now, I have bonds slightly bearish, Dixie slightly bullish because we know bonds move Dixie, Dixie moves everything else. And I don't even have to go to a lower time frame. So right here, we'll probably see, but the bonds push toward the previous month low. And Dixie, all right, we're gonna start. You know what? We're actually gonna start on the 1 year. Let's do that. So I was talking with my man Toast. Shout out Toast. Um, and just going over Dixie. So overall, overall, we're in a recent uptrend, right? Downtrend, higher high, lower low, lower high, lower low, lower high. I'm expecting a lower low over time. This is over time. So currently we're in this. We're still in this external, this external. Everything else in here is eternal. Don't get caught up in that. And we'll get into this in a minute. So, but this is higher time frame. So let's go down to the 3 month. I'm sorry. Uh, and I'm going to try to move through this fairly quickly because I do have a lot to say about gold today. Um, so what we've done is actually come into a premium OT of this range here, right? So now we're in it. We've reached into this gap. We filled this gap. And from this gap, depending on what you use as a change in the state of delivery, if you're using the candle that creates it, your change could be here. If you don't, if you use a series of candles, it's here, right? So that's for the ICT guys, right? But the other thing is we tried to make a push here, we failed, right? And so now I have another, whatever you want to call this, order block demand zone, doesn't matter to me here. So we swept out this 3 month, this quarter, well, basically a quarter. This quarter, swept that, continue lower. So now let's go inside this piece of price action on the monthly. And we'll just go top down that way. So let me move that, let me delete that. All right, so on this monthly, this is my range here. Here, this would be my external high, this would be my external low, right? Now, I know a lot of people that trade this way are looking for us to come back into some type of premium of this range. I just don't know if that happens immediately. And I'll tell you why. And it's this right here, right? We sweep out these 3 months, right? So those who trade the candle two, candle three, whatever you want to call it, you got to sweep here, and then this is your candle three. So you're looking here. You're like, oh yeah, we're gonna come in here filling this. Oh my God, what is going on? We're gonna come down here, fill in some of this monthly, and then we're gonna head up. Okay, maybe. But what happened? We disrespected this entire gap right here, and who knows? We could. This is to me, this is a retracement into this monthly area, right? Deep retracement, but still. Let's go down to the weekly, right? So what I've done is already put in my premium discount right here, right? So now of this range, or a premium discount of this range, and what I'm looking at is from this high to this low, we've created a new range on the lower time frame, right? So again, here we had a stop run here, and then now you have your order block, demand zone, whatever you want to say on this weekly time frame. Not gonna spend too much time on it. Let's go down to the daily. Okay, so on the daily, we're looking here, and this is something that I was speaking to Toast about, and it's just not something that I look to trade away from. This is asking to get ran, right? So what I'm looking at right now, all right, what I tend to do is I start looking at where we had our most recent stop runs, okay? And from the stop run here, I had a stop run here, right? Had a stop run here, right? And so from here, I'm looking how far can we come up. Give me 1 second. Okay. So I'm looking, where do we have orders resting that we can fill, maybe fill in an imbalance, right? So you have imbalances here, this wick filled here on the lower time frame, that's going to be a gap. Here, this wick here on lower time frame, there's a gap. And even up here, this is a gap. And this is where, you know, you can use, for those of you who trade ICT, you can use things like your inversion gap here. This would be your daily order block. So I'm expecting, right, even if you get something here, maybe fill up this volume imbalance, come up here, and then who knows, I'm not here to predict, you know, what happens here, but this is where I think some magic is going to happen. I think people are going to be looking long, and I think they're going to get caught offsides. So that is my view on Dixie right now. Again, I know I'm moving through it a little quickly. Market opens in about 30 minutes from here, so I'm just trying to put something out for you guys so you're able to take a look at it. Even if we go down to the 4 hour, I don't ever want to trade with this under me. This is just not something I'm interested in. So so we wait, and that's really all it comes down to. We just wait. So obviously, if I'm looking for that on the euro, let's go. We go top down from here. So on the euro, we actually have SMT up here with GU. So you have the SMT here on the monthly so far. And what we've done, we just ran that weekly gap. We just ran this weekly gap, and now we set up equal lows. So what do I expect? I expect a slight push up, and then maybe here. What happens from here? I don't know. We could reverse from here, right? We could continue here. There's failure swings all right here. You know, since we swept this run up here, we could come down here to this target, which will mean Dixie would push higher. I'm not here to predict. But just on the higher time frame, this is what I'm looking at, right? So on the daily, what you have right here, you have your order block here, demand zone, whatever you want to call it. You have an inversion gap right here. So we could easily, there's a gap. There's a gap here. So we could easily come up here, fill this gap, come down, come up to this inversion, come down. If we get down to a lower time frame, this Okay, this range right here, all right, this range has been balanced already. I can actually just remove that. That's been balanced already. And right now, this is our external high. This will be our external low on our 4 hour range. And so we could look to come up, like I said, come up here and make something happen. Same thing, same outlook for GU. It's not it's not really complicated this week, you know. And look at this sweep we had on the previous week, right? So I would expect I have this thing, but just like the arrow said, I would expect us to come up here and do something, right, and have some kind of, you know, reaction here. So and it should be this should be pretty classic here. Now once we come down to these lows is when we start to figure out, because we have a bunch of all failure swings here, right? Really we can just pull it here because all the way down here, and then we have a bunch of imbalances to fill here. You have a whatever, like I said, order block demand zone here. All right, so the main thing, I actually, you know what, actually let me get to JPY real quick. Let me get to the basket. So here on the basket is interesting this week, right? We're so close to these lows. We've been coming down to this low to fill this, what would be a market maker model, sell model, right? From here back down. Okay, so on this weekly, what have we done? We just swept out this week, right? Just swept out. So I would expect a move here, right, to come get this low. And I'm not watching JPY any other way. I expect this move to be very quick, very quick. Like, so I expect a Monday low of the week on JPY pairs. So I'm watching all of them. And if not, if if they get some type of retracement, I think, you know, it'll be max Tuesday low of the week, and then it just pushes. So from here, we did leave these equal highs, so we very well, you know, could come down here, you know, come back in here to, you know, premium of this range here, and then the sell off. Once we sell off, hold your trades. You can hold for some money, guys. Like, don't be scared. So simple, JPY, simple. It should be really simple this week for here, because even I'll go to USD JPY. I have a Chef JPY as my main play on JPY. I'll show you guys why here. So if you look here, we came and we filled in this gap right here, right? We have no reason to come back down here because this area from here to here has been totally balanced, right? Bang, 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 come back in, bang. So if you look at this area right here, balanced, here to here, balanced. I don't want to see anything come here, this previous week low. So I have my previous week range. If I get, and look how we closed up here. I don't even want to see it come down here, because look, even on the lower time frame, right? Balance. Let me change the color of this. Regular block. Let me just change this color. Right. All right. So this. Let me take this off. My bad, guys. I'm trying to do this as quickly as possible. All right. See that? Balance. There's no need to come in here. There's no need to fill this gap in here. None at all. None at all. So I'm expecting this candle right here, this daily candle, I'm expecting a move, a very quick move, if anything. Somewhere here, and then we're up. So even, I think it was on the 4 hour. Yeah, this is where I'm going to take an entry here around this area. I'm going to take an entry. I'm not going to set a limit, but I'm definitely going to take an entry here to target the top of this range. I just don't see a reason for us to come back down here. Now, I will say this: if JPY, if the basket decides to take those equal highs, if it decides we start moving up here, and I'm not getting my reversal signature here, and I think we start moving up here, then I might take an L here, and we do have, we have some failure swings here, and we have some failure swings here. I don't see us getting down here anywhere, so I'm going to be pretty tight looking at Chef JPY here. Same thing with USD JPY. So literally exact same thing on the lower time frame. We have this failure swing that I would love to get these equals, get those knocked out here, get something maybe here, which would put us in discount of this range, and then up. So that's what I'm looking at now. Let's see. I'm not going to do any crosses, but I want to get into. I really want to get into gold. All right. I think gold is the most important asset this week, and gold is the most important asset this week for one reason and one reason only. It is the Bloomberg Commodity Index Rebalance Week. You probably never heard of it, right? It's how can I explain this? Let's get into the chart first, and then I'll explain what that is. So here, on this weekly, let me say this: I'm just expecting bullishness on gold, so we don't even have to really get into the chart. I'm expecting bullishness, but I expect it to be very short term. I think once these highs get taken, I think you're going to see a massive drop. Right now, we have SMT right here on the daily with XAU GBP. I don't really use silver to do my divergence, but even on the lower time frame, we have it here, right? And so look, order block, and so now we're in this range from here to here. We're in this range, so I wouldn't mind seeing something, like that, or maybe we don't even take this low. Maybe we don't even come in a discount. Maybe we just do, we create something here. But I'll definitely be looking for a bullish reaction. And who knows, we could just take off from here and just go to get the highs. But here's the issue with gold. Chart work is done. Let me explain this to you guys. All right. The Bloomberg Commodity Index, BCOM. Okay, it's a major benchmark index that's used by commodity ETFs, pension funds, hedge funds, institutional, and all the funds that track BCOM, they have to rebalance to match its weighting. Meaning, if I buy 15%, your fund buys 15%. If I buy 7%, your fund buys 7%, right? But here's the problem, right? They are contractually obligated to buy and sell, to match the holdings, right? I'm trying to do this without a chart. It's going to be a little tough, but just kind of follow along if you can. All right. So here's the impact. Between January 8th and like January 15th, this is when the rebalancing happens, right? It's non-discretionary, means it has to happen. They have to do it. It's already automated by the systems, right? And what you're going to see is when gold drops, it's going to trend, right? There's not going to be a whole bunch of pullbacks. There's not going to be a whole bunch of rebalancing and ranges and whatnot. It's just going to go. And if you actually look on the daily, there's literally so much to come back and rebalance, come back or whatever. So what happens is that the funds that track BCOM, they're forced to sell the futures, right? So the rules are that are going to cause about 14 billion in automatic sales in gold and silver. The Bloomberg Commodity Index manages about 110 billion in capital, and all those funds that track it are contractually obligated, like I said, to follow its rules. So no single commodity can exceed 15% of their index. Um, Gold's current weight is about 20.4% of their index, and they have to cut it to 14.9. They have to, which means they have to sell it no matter what. And because they have to sell it, they have to do it between the 8th and the 5th. Well, it usually happens between the 2nd and 3rd week of January, right? There's no decision making to be made. So that means they have to sell over $7 billion worth of gold, right? And silver is even more damaging, even though we haven't even looked at silver, but it's more damaging. Um, but you have the same outlook, and honestly, you may get a failure swing here, and that would be your this. You could have some type of SMT right here, divergence here. So just be wary of that. But the reason silver is more damaging right now is because silver's target weight has been set at about almost 4%, so like 3.94% of the total index, and it currently is sitting at about 9.6. It has to get down to 3.94. That means it has to cut about 60%. And together with gold, that's over that's over $14 billion that they have to sell, right? This is predictable. It happens every year. This is predictable liquidity, right? And because of this, you can see gold drop between 2.5% and 3%. You can see silver fall even harder. Um, but on the flip side, where are they going to put that money? And this is where you usually see oil and cocoa. You see that drive up. So watch your WTI, watch your cocoa, watch your chocolate. You can watch nickel, right? Um, Asia is very heavy with nickel, with their electric vehicles, and there's and even EU, the European Union is they have like mandatory calls for solar panels. They use a lot of nickel. I'm sorry, that's silver. That's silver. So uh, the thing with the nickel, the technology in Asia, that uses a lot of nickel. So all your metals, your cobalt, your platinum, you may see funds move from gold and silver to that. Um, so gold is slated to maybe is projected to end the year at about 5K an ounce, right? And which is going to be it's when it runs. This is I'm not going to say this is a artificial drop, because it's scheduled, it's planned. It's not all going to be in one day, but it's going to go and it's going to run hard. Um, you just have to be ready for it. And the thing about it is, you have paper trades with gold, and then you have people who physically want gold. China put a restriction on silver. Damn, I wish I was live so I could just talk to you guys about this, but China put a restriction on silver. So people are want on futures. They want the delivery of their product instead of just rolling over their contracts. So people that are buying gold, they want their gold. People that are buying silver, they want their silver. But the problem is, we've been using more silver than we've been producing in the last 5 years as a world. So the demand is is rising way higher than what the supply is able to come up with. So you're going to see a pump. You're going to see gold pump. You're going to see silver pump all year this year. Um, that's really all I have right now. For the few of y'all that watch the stream, ask me any questions. But yes, I'm bullish short term Dixie. I'm bearish short term bonds. I am bullish short term silver and gold. But this next week or two, I will be bearish on silver and gold. I am looking for the reversal, and I am trying to catch the top because And I will take a couple losses trying to catch the top, because I know if I catch the top, I'm just going to let it run for a week or two. And you've seen with EU, GU, same thing. It could run, it could continue running lower, or we could see a flip. So trade safe. I'll catch y'all boys this week. Always love y'all boys. So